So, Bitcoin's price feels stuck, right? It just feels like it's going nowhere. But what if I told you there's a powerful, hidden force building pressure just under the surface? Today, we're going to decode that force, the $100,000 gamma magnet, and figure out what it really means for the rest of December.
I mean, if you've been watching the charts lately, you've definitely felt it. It's been this frustrating, choppy price action that seems to be going absolutely nowhere. It feels like it's just stuck in the mud, grinding away in this tight, really annoying range. But the question is it really stuck, or is something powerful brewing just out of sight?
Let's dive right in. See, the reason for all this confusion is that the market is telling two completely different stories at the exact same time. You've got the short-term, tactical noise that's affecting us this week, and then you have this much bigger structural signal that's defining the rest of the month. Our job today is to separate that noise from the real signal. And to do that, to untangle these two stories, we've got to understand the hidden forces that are pulling all the strings. We're going to take a look at the options market, which, it kind of acts like a gravitational field, creating these invisible walls and magnets that are yanking the price around. Okay, first up, our main tool, gamma exposure, or GEX for short. Now, don't let the name scare you. It's actually pretty simple. Just think of it as the collective risk held by the big market makers. Now, to protect themselves, they are forced to act like stabilizers. That means they have to buy the dips and they have to sell the rips. And this behavior, it dampens volatility and creates these really powerful price magnets at key levels.
The second concept, and this one is absolutely crucial, is confluence. Think of this as our lie detector. It tells us if the short-term magnets for this week are actually lining up with the long-term structural magnets for the whole month. So, high confluence, that means a price level is real. It's important. Low confluence, that means it's just a temporary illusion we should probably ignore.
All right, got our tools? Good. Let's start with that first story, the illusion. This is the tactical picture that's only relevant for this week, ending on December 12th. First off, let's get some perspective here. The options expiration for this week, it only accounts for about 18.5% of the total gamma exposure in the market. In the grand scheme of things, it's a relatively minor player, but boy, is it making a lot of noise. And all that noise is what's creating the levels that are dictating the price action right now. We've got this strong magnetic pull to a central $90,000 pin, a pretty weak barrier of resistance above it at $95,000, and a temporary floor below at $80,000. This whole setup is what's causing all that choppy trading we're feeling. But here's the key question. Are these levels even real? And the answer, from the data, is a resounding no. The confluence score for these weekly levels is a tiny 0.5 out of 5. That's practically nothing. This is the data screaming at us that these levels have almost no alignment with the true market structure. They're basically a statistical ghost. And this quote from the source material just nails it perfectly. The weekly price pin we're feeling right now is just temporary scaffolding. Sure, it looks and feels solid at the moment, but come Friday, it's all going to be dismantled. And that's when we'll see the true architecture that was hiding underneath all along. So if this week is just scaffolding, let's go look at the true architecture it's hiding. This is the second story, the one that really matters for the rest of December. And it's all being driven by the massive month-end options expiration. Now look at this. The month-end expiration is not some minor player. It's a giant, accounting for 44% of all the gamma in the entire market. Its influence is massive, it's structural. This is the real force that we need to be paying attention to. So let's put them side by side. On the left, you've got this weak, low-confidence illusion for this week. On the right, you have the powerful, high-confidence reality for the rest of the month. And this right here is the most important takeaway. The market isn't stuck where it is now. It's being structurally pulled toward $100,000. And to really feel what's happening, this next quote gives us the perfect mental picture. It's like a heavy spring being squeezed between two immovable objects. The ceiling is up there at $100,000, and the floor is down at $85,000. The price is just coiling tighter and tighter inside this range, building up a ton of potential energy. So let's put some numbers on that ceiling. The $100,000 level has, get this, a staggering $178 million in combined gamma resistance. This is a massive wall, and it's acting as an incredibly powerful price magnet, pulling the market upward. And on the other side, you've got the floor. The $85,000 level has over $83 million in combined gamma support. This is the bedrock.
A break below this level would be a huge structural event. Together, these two levels, the ceiling and the floor, define the true playing field for December.
Okay, so we have this week's illusion and the month's reality. How in the world does the market get from one to the other? Well, it happens through a really cool process the source material calls the gamma unclenching. So picture this. What happens this Friday? It's pretty simple. Step 1, that temporary $90,000 pen, the scaffolding, it just disappears as the options expire. Poof, gone. Step 2, the price is released. It unclenches from that artificial anchor. And finally, step 3, it becomes free to begin its slow, structural drift up towards the real targets of $95,000 and $100,000. All right, let's put all these puzzle pieces together. We can now actually build a clear roadmap for the rest of the month and understand exactly how to navigate this path towards $100,000. So think of December as a month with two completely different acts. First, there's the phase we're in right now, until Friday the 12th. This is the tactical pin phase. We should expect more frustrating, choppy action around 90,000. But then, starting this weekend, from the 13th to the 26th, we enter the structural grind, a slow, determined, low volatility climb toward 100,000. You see, it all boils down to knowing the difference. That $90,000 pen is just temporary noise. The real, high-confidence signals are the $100,000 structural ceiling and that $85,000 structural floor. Your focus should be on the structure, not the scaffolding. So what's the big takeaway here? What's the highest conviction outlook we can walk away with? Well, the primary path is a gradual grind up to 100,000. Now, it's not going to be a straight line. There's a massive resistance zone at 95,000 to get through first. 85,000 is the absolute line in the sand for support. And remember, because of the gamma environment, this is likely going to be a slow, grinding climb, not a sudden, sharp rally. And there you have it. That's our data-driven roadmap for December. The options market has laid out a really clear path, a structure that's acting like a compressed spring, just ready to slowly expand towards 100,000. But we have to remember, this structure is just a machine, and any machine can break. So the final question we have to ask ourselves is, what unexpected macro catalyst, a news event, a major liquidation, could be the wrench in the works?